All right, guys, in this video, I'm going to break down each of the cycles that I've been looking at. The real estate cycle, the economic cycle, the stock market cycle, Bitcoin, altcoins, and the metals, and what I'm looking at doing for the remainder of the peak and then the collapse in the cycle. So if you've been wondering about the cycles in general, this is the video for you. I'm going to talk generally about the markets, about these cycles in a nice, beautiful setting outside, so you can get a better picture of basically what my analysis is about and how you can follow along with the videos day by day. Like, subscribe, let's get into it. All right, guys, welcome back to the channel. As you can see, today's video is going to be a little bit more relaxed than other videos where I've got a ton of charts going on. I think at times it can be a little bit confusing for the audience, but that's not to say that the majority of you are confused. I think it might be a good idea just to have a discussion on my thoughts on one, what the peak of the real estate cycle looks like, what the peak of the stock market cycle looks like, what the peak of the Bitcoin cycle looks like, and the altcoin market. And five, if that's not enough, and this is probably why it gets confusing because I'm covering so many topics in particular videos, the multi-year bull market that I'm looking at for in metals. In particular, one in particular that I've talked about a few times recently on the channel, as we've just broken out into 13-year highs, and that is silver. Hopefully for the few that are following along have been seeing how the cycle has been progressing over these last several years. You know, I've been on YouTube for many, many years, looking specifically at finance now since, say, like 2020 on YouTube, that is, but obviously for my own investing, I've been going since 2006. I was 20 years old then. I'm nearly 40 next year. And my starting point was in real estate. So I've been through a peak of a real estate cycle. I've been through a crash in a real estate cycle. I've been through small bubbles within real estate cycles when it comes to different regions. And say in the case of Australia, you've got mining towns. So it could be different for your areas, but that's the experience I've had there with these booms and busts in the cycle. So I said I'm covering 5 things. Hopefully I'll get this video in about 15 minutes to you. And I may overlay some charts here as well so you can see what I'm talking about. So let's start with the biggest one, the real estate cycle. And then I'll get into the smaller. What I'm going to do is work down from the largest market caps down to the smallest market caps, if I can get those right. So real estate, obviously the largest market cap in the world. That is the 18-year cycle. The 18-year cycle continues to repeat time in and time out, no matter almost what. The only thing that disrupts it is a world war, which we've seen in the 30s, and of course the First World War, but then it picks up where it left off. This is the real estate cycle. It keeps going because land, like you see here, land that we all live on is captured. So the profits, the gains, and we are allowed to speculate on land. You get booms and busts whenever you can speculate on anything. No matter how much extra apartments you build and all this sort of stuff, there will always be booms and busts. It's basically like Bitcoin and altcoins. You keep producing more and more altcoins, yeah, they're still going to have a boom and a bust, but it may not be as much in those particular areas. So I can see why some people might get a little bit confused when it comes to the cycles, because there are so many cycles working within cycles. And as I've said, you know, this is something I've been doing now coming up to 20 years. Always something to learn, because each cycle is slightly different in how it comes about. The previous one, we had the GFC. This one is not going to be a GFC. It's going to be something different. And we've talked about this on the channel, what it might look like is happening right now with interest rates having to remain high, and the bonds, the yields at least, rising with that, and then the bonds falling. When I'm talking about this, yeah, I've got an Australian accent and I've got a lot of Australian audience, but this is focused on the US stock markets, US real estate markets, US economy, because that is the largest market in the world. So that's where I've started from, right? This is the biggest market, the largest market caps, and where the driving force of world economies come from. Yes, China is there. Yes, India is there. Brazil is there. Japan is there. And I'm going down the list of the largest economies in the world, of course. UK, Germany, etc., right? But you've got to focus on the US. Australia ranks at like 13th, thereabouts. So anyway, That's the 18-year cycle. That's why it continues to unfold time and time again. This time, is it going to be different? There's always a slight percentage, but because it's been over 200 years and it's been working very, very well, I don't think it's going to change. Now we move on to stock markets. So the real estate cycle is still coming up. Sorry, we're going to move on to stock markets. Real estate cycle is still coming up, coming into a peak and then into a steep correction. I think from what we can see, we're looking at towards a peak forming late 25, 26, and then we start to roll over. I'm not calling any sort of major collapse in 26, not at all. Okay, now we move over to the stock market. Stock markets have been heading higher. I think they're going to continue to head higher. And amongst all this, I'll talk about how I'm looking to move, well, what I'm doing with my own portfolios. I'll get to that in a minute, just as I explain all the different cycles that are going on. Within the 18-year cycle, you have the stock market cycle, which generally follows the 18-year cycle. Yes, you're going to get some stronger booms and busts in between because, well, you can trade it on an open market, right? You've got liquidity. With real estate, you don't have that fast turnaround liquidity. You know, you might have to wait a month to sell a property, 3 months to sell a property, depending where you are, maybe 6 months or 12 months. It depends on the stage of the cycle. But talking about the stock market, from a cycle perspective, it still looks like it has further to go. And when we look at the two, when we look at real estate and stock market, just looking at these two, again, remember it's the US that I'm focused on here. Generally, we see the stock market peak after the real estate and the economic cycle peaks. The 18-year real estate and economic cycle generally peaks first. Doesn't mean that you're going to get a bell rung and said, economy's over, it's a collapse tomorrow. That's not how it works. Then the stock market peaks after that point. So you see the stock market starting to roll over. Maybe it plateaus, maybe it starts to roll over. Stock market's still going up at that point, generally led by things like banks. And in this case, maybe we'll also have stocks that are related to commodities and to technology, like AI and those sort of things. That's what's going to keep dragging it up. But what will start to drag it down is things like real estate or anything in the home builders sector, which we have already begun to see. So we've already begun seeing that with the home builders ETF, companies like DR Hortons and so on. So those look like they are beginning to peak at this point. Okay, leading on from that, stock market peaks after that point. That might be, look, we're throwing out numbers here, maybe 2027. But the point I'm trying to make is, from what we've seen in history, the stock market peaks after real estate. If we're looking at real estate peaking somewhere between 25 and 26, then I'd expect the stock market, US stock markets, S&P, Dow Jones, NASDAQ to peak after that. Okay, moving on to the next largest market cap, and that would be metals if we consider gold. Gold, in this case, will potentially be going higher, probably higher than the 3,500 per ounce. I think that's pretty likely. So leaving that aside, we can come back to that in future videos. Silver is the next biggest one for me. Silver is a big one. I talked about that in yesterday's video, looking at a multi-year bull market for silver. We've just hit a new, fresh 13-year high at around $36 an ounce for silver. So I think that's got a little way to go. We've watched the gold and silver ratio break down. These are just very, very fresh. So it's at the beginning of that turning point, or the beginning of the confirmation, right? We still need a weekly close. We still need a monthly close because we're looking at 13-year breakout points here. So although we got the daily, which is pretty incredible in itself, breaking a 13-year move, we still need further confirmation, as with everything, right? But if we get this confirmation, maybe June closes out a new high here for silver, then we could see this thing go a lot further for a lot longer because, like Gann says, Gann, look him up, you want to look for markets that are beginning a new campaign. So that means you see a long accumulation, and the accumulation is only confirmed once you get the breakout, because at the end of the day, it could be distribution and it breaks down. This time, however, we got the breakout, so that's a confirming signal. Now, if that's the case, generally you would see these markets, and as the way Gann talked about it back in 1900 and whatever, 1905, 1909, Wyckoff also interviewed him, if you know Wyckoff. He says that these markets can run for many years, right? Because of how long that accumulation was. For silver, there's still an all-time high at $49.50 an ounce that it needs to break through. Currently at 36, so what's that? It's about $13 to get to that high. 13 on 36 is what? You guys tell me, what, about a third to go, maybe like 30%? 30% move to the upside. So that's pretty significant, but I think it could go further. I think it's going to break into a new all-time high with this run as we lead into the end of, well, the peak of the real estate cycle, real estate and economic cycle. Stock markets will keep going up, miners might keep going up with them, and we're also running into another peak, another cycle, which I won't go into detail in this video, which is the commodities cycle, the Kondratiev cycle. So that typically runs up for about 20 to 30 years up, 20 to 30 years down. We're running into the final peak of that 20 to 30 years up before we head down. So those who are on the bandwagon of gold and silver, I think they're going to do relatively well this time, but next cycle, maybe not as well as this time, if at all. All you have to do is go back to the 90s for gold, and that didn't go up. It had an 80s peak and then ran down to roughly 2000, 2003, right? So there's your 20, 23 years of down, and everyone thinks gold goes up in a recession. The charts just prove that. You know, it's not my opinion. Just go back and look at the history if you don't agree. So wrapping up with metals before I get into Bitcoin and altcoins, silver on the way up, obviously gold as well. Gold can do relatively well at the end of these cycles, these commodity cycles, and that's all leading into this final peak as well. That's why I think these things are going to do relatively well. Bitcoin's at 110, 109 as I'm filming this today. It's had another relatively positive session, consolidating at these prices. That is very, very short term. Longer term, I still think there is further to go in BTC. I think we've got much further upsides, whether that's 120, 150, 200, I don't know. I'd rather be a little bit conservative here because this is the first 18-year cycle that Bitcoin has been through. That doesn't mean that I'm going to be selling out of absolutely everything that I own of Bitcoin, because who knows, maybe Bitcoin does keep running with the metals market as we start to see a peak and a collapse for the 18-year economic cycle, US real estate economic cycle. It's all the same thing, okay? So if you hear 18-year cycle, it's the 18-year US real estate and economic cycle. So rather than say the whole thing every single time, just know that's what it is, 18-year cycle. Okay, so Bitcoin hasn't been through one of these. Maybe it does head up. It has a lot going for it at this point. It also has its ETF, and a lot of people believe that it could keep running for years on end, because when gold got its ETF, it also ran for 8 years straight there. I see that comment come up often whenever talking about Bitcoin and the end of the cycle, but I don't think that means that Bitcoin is just going to run straight up for those 8 years. There's going to be pullbacks in between, and maybe it doesn't run up for 8 years. There's nothing to say that it will. And relating gold when it gets an ETF to Bitcoin when it gets an ETF, comparing the two, it might be a little foolish, because gold's been around for thousands of years leading up to its ETF. Bitcoin, on the other hand, has been around for 16 years, 15 years when it got its ETF, right? Now it's into its 16th year. So take that for what you will. Is it worthwhile comparing the two just because they got an ETF? I don't think so. There hasn't been that 2,000 years of history for it yet. Doesn't mean it can't happen. It might have a relatively okay move up, but I don't know if it's worthwhile saying it's going to go up for 8 years from this point. 8 years from getting its ETF at 2024. 8 years will take it out to 2032. Okay, so maybe it gets a few years. That's even a good sign. That's a really good positive move for BTC to move up for this cycle. So although Bitcoin, and I'm being a little bit conservative here with BTC, that maybe it doesn't run as hard, maybe it doesn't get to $500,000, maybe it doesn't get to $1 million, and I'm being conservative here. It hasn't broken down, so just keep trading. What I'm talking about is basically the analysis of the way I'm viewing the market. Maybe you agree, you disagree, that's okay. That's obviously what the markets are for. You can place your bet and make see who is right after that. At the end of the day, it doesn't matter if you're right, as long as you make money. That's the big thing here. I've been wrong plenty of times. I know people are very quick to point that out. At the end of the day, as long as I'm making money, that's all that matters. And the same thing should apply to anyone else that's trading in the market. So here we are, BTC, conservative. Even if this runs up, just what I'm doing is, as I always say, follow the trends and keep trading in the direction of the trend. If you're going up, keep trading in that direction, keep holding, right? That's the main point. If it starts to break down from significant levels, then that's the time that it's time to get out. Okay, we talk about that on the channel as well. Now, going down the market cap scale. So we've gone from real estate, the cycle there, it's the largest cap market in the world, down to the stock markets. In particular, all I'm really focused on here is the US markets. Then down to gold, which was, I don't know, what is it, 20 trillion market cap. Of course, silver, I've included that, even though I think it's roughly around the same as Bitcoin or slightly smaller. Either way, metals, then Bitcoin, then altcoins, of course. So here we are, Bitcoin into altcoins. Now, in the last several videos, I've covered alts in particular, looking at, for the total 3 market cap, a breakout of $900 to $950 billion on that market cap. That is going to be one confirming signal. We hear about altcoin season every single day of the week. Everyone's waiting for another altcoin season, but it looks like it's getting closer because the altcoin market cap has continued to climb here. So if that continues on, well, guess what? We get a breakout of the 900, 950 billion, boom, that's a confirming factor. In the meantime, leading up to that, these moves, yes, they could start the altcoin season. Yes, they could have been the low, and we've missed out on that exact bottom. I know if you've made it this far in the video, you're probably not about picking the exact bottom. You're about taking a chunk of profits out of the middle. That's what I always talk about here on the channel. That's what I talk about with our members. And more in particular with the members, we go into how it's done for me, how it's done for them, and asking questions there. Because at the end of the day, we can talk. That's usually what YouTube's about. Everyone's talking about everything. Everyone's got an opinion, right? But how do you make money from it, even if you're wrong in what you're talking about? That is how people make it in the market. That's what I've seen over the last 20 years. There can be a lot of people who are wrong about what they say, yet they keep making money because they just keep following their trades. You know, I think it was Druckenmiller was trying to short the tech boom. In one case, he got a lot wrong, lost hundreds of millions of dollars, right? But he said many times, Druckenmiller, if you're unfamiliar with him, look him up, Stanley Druckenmiller. He has been wrong a lot in his career. Was he in his 70s now? But at the end of the day, as long as you keep trading with your plans and not following just the analysis, your plan is the thing that keeps you on the right side of the market, right? That's the thing that's going to make you money. So that's what we go into further detail because that's the place for it. TI Premium, links in the video description. That is a discussion about us and what we do at the Investor Accelerator. Back to altcoins, breakout $950 billion is the takeaway point there. Ethereum right now today has got to that 50% level at around 2,750 bucks. The number that I've been watching, which you guys have been following, is around 2,900 because that's some of the previous tops, the swing tops going back to earlier in this year before the breakdown. That could set ETH up really, really well for a nice move up into the mid 3,000s and then testing that 4,000 level again. So that is looking good for Ethereum. Moving down the market cap list, you've got Solana, XRP, Sui, you know, you name it, Doge, ADA, all the rest of them. I'm just looking for the ones that are in, as I follow the charts, just the ones that are in a stronger position, holding above their 50%. More importantly, are doing well against their Bitcoin value as well. Because if they can get a breakout against BTC, then that's going to be a stronger move. Think of it like the gold-silver ratio. If that ratio is gold-silver is breaking down, silver is doing better. If it's going up, gold is doing better. And you just want to be on the right side of those trades there. Basically, look where the money is flowing more easily. That's the simplest way to look at it. Now, there are going to be people who are much more in love with meme coins. They're in love with, I don't know, just small cap garbage. That's not really my forte. I'm not interested in playing that game because I'm more of a long-term investor. Been going for, as I said, 20 years. I prefer real estate. I prefer Bitcoin. I prefer stock markets. I prefer looking at these things that are going to be around much, much longer. Yes, I understand some people want to play the game of altcoins and gamble on it, risk it for the biscuit, whatever the frig they want to do. That's up to them. The analysis that we use works on all charts. So if you've got enough history, it's going to work for you. And we've seen that with our members trading markets short term or even longer term as well, whether it's altcoins or stocks, it doesn't matter as long as you're able to read that. So looking at it, just going high level again on alts, ETH, relatively okay position, stronger position if you can get above 2,900. XRP is still above the 50%. I'm going off my memory here. The 50% was around $1.80 and it's climbing, 230 now, so that's okay. And SUI still in that stronger position around sort of 350-ish. So still above the 50% as well. Sol, on the other hand, still below 195. So that needs some work, needs to do some work to get above that level. So those major alts aside, looking at the total market caps now for the alts, as I said, 900, 950. The USDT dominance is still on that line there at around 4.5%. The breakdown of 4.4% is going to be a big, big, big key here. That with that break, that is going to really send it for the alts, I think. And if it can break 3.7%, which was the previous support, that is going to be an all-out mayhem mania for Bitcoin, ETH. Well, ETH is an altcoin, and altcoins, of course, right? I think that is a massive, massive play there. So I'll look at invalidations in future videos. Like, subscribe if you haven't already to the channel. This is the way I'm seeing the end of the cycle. I didn't even mention how I'm moving all my money around. I've been and still am very heavy with BTC. If you haven't picked up by now, I think silver is looking relatively good. Could be a good play for some of the portfolio. Maybe getting out of Bitcoin into that, who knows, right? Maybe altcoins if you want something less chaotic and less turbulent, and you're not about that sort of everyday life trying to be stuck in front of a screen. I much prefer to be outside, but you do you. So primarily there, Bitcoin, liking silver, real estate's always a stronghold here because everyone needs somewhere to live. You're never going to live in Bitcoin. That's Michael Saylor. Well, I'm starting to ramble on that, but I think you can get the picture of what I'm seeing for the end of the cycle, or peak, more importantly, the peak and then the collapse, and then how I'm looking to trade that collapse throughout the cycle. I've talked about silver. I think that has multi-year moves ahead should it confirm. Therefore, I think it's going to make it through with corrections along the way, but I think it'll make it through that significant correction in the 18-year cycle. Gold is, of course, another one there. And if Bitcoin's able to make it through relatively unscathed, it might also be another good place to have some, some money parked. Cash is always king in a correction because prices are going down. Therefore, the cash is able to buy more. So the purchasing power increases. Even if you believe the US dollar is going to collapse, as we've looked at when it comes to yields and bonds and how this market is unfolding towards the peak of the cycle, even if you think the US dollar is collapsing, which we've seen it going down at 98, 99 now, as I've said, even if you think it's collapsing, you still need to have some cash somewhere to live day to day and then to go and buy those assets which are correcting, which are dropping in that bear market. As I was editing, I figured I could explain this just a little bit clearer. In addition to everything I've mentioned in today's video, how I invest is that I go along with the cycles. So when I think that there is a low forming in a cycle, I try to shift more of my capital into that part of the market. As I think there is a top coming, doesn't have to be the exact top. Remember, I'm only trying to take chunks of profits out of the middle. Then I start to take money out of the market at that point. Now, my focus is much longer term, many, many months to multi-years, which is why I go from Bitcoin into real estate, then Bitcoin into silver, and I can start to move my funds around in that sense. I'm not trying to quickly trade in and out of markets. I'm not trying to take the tops out of the real estate market. I'm not trying to skim tops out of Bitcoin or silver. I'm looking for much more established positions that I can then set and forget for a few years. It doesn't mean that I can forget it completely. I'm always tracking my investments, as you'll see with the members in TIA Premium. That's what we go through day by day, week by week, month by month, of course. And then looking at how I could better use the capital that I've got. If I think there's a better opportunity elsewhere, then I'll look to start scaling out and move money across. I thought I would make that a little bit clearer in the video. Back to it. Heaps more coming up for you. I don't think we're going anywhere because the cycle never ends. We peak, we correct. The biggest time, the best opportunities come at that significant low of the 18-year cycle, which you may only experience once in your lifetime because you may be into your 40s now. And this might be that one chance. You missed the last one, this might be that one. That's where the market moves from that point. Maybe you get 2 in your lifetime because you're only in your 20s or your 30s now. So that's the biggest time, I think, to be with the market. The late 2020s when shit is going extremely sour, 28, 29, 2030, could be that time where things are going really, really bad and people don't think the world is ever going to come back. They think the US is dead. It's unlikely anything's ever going to return to normal. People are unemployed. It's nasty. It's nasty. That's the sort of thing there. But I think we've still got some good times ahead. So I won't go too far into the negatives there. And I'll see you guys back at the next video. Take care, like and subscribe, and I'll be back real soon with you. Cheers.